The oil and gas sector remains one of the most dynamic and ever-evolving industries in Nigeria, constantly affected by local and global shifts. Recently, we've seen significant developments from Dangote Refinery's reduction in the price of premium motor spirit to the complexities surrounding local production and the challenges of global market influences. As Nigeria aims for greater self-sufficiency in refined petroleum products, questions arise about the country's refining capacity, pricing dynamics, and the ongoing global pressures that shape the sector's future. Well, joining me for more on this, I have Bolade Agboola, Macro and Equities Analyst from Chapel Hill Denham. Thank you so much for joining me today.
Thank you very much for having me.
Okay, I would like us to begin with a bit of catch-up on 2024. I mean, specifically, Nigeria regained its top oil-producing African country spot from Angola. Talk to us about this.
Yeah, so average oil production last year was about 1.34 million barrels per day, which was 8% higher than what it was in 2023. This performance just highlights the impact of some of the policies that have been put in place and also efforts by the government to sustain oil production in the country. First off, in terms of policies, we saw the president release about 3 executive orders last year, which are policies that have caused some reforms in the oil and gas sector. These policies include implementing fiscal incentives for non-associated gas, midstream and deepwater development. The second is the streamlining of contracting processes, procedures, and timelines. And then the third executive order is also the enforcing local content requirements. These policies, in conjunction with other reforms such as VAT waivers in the oil and gas sector, has improved investments in that sector, and which we have also seen reflective in the performance of the oil and gas sector. We can also attribute this improved production, to security around most of the assets that we have. We know that in 2022, when oil prices were high, our production was almost below 1 million barrels per day, and this as a result of pipeline vandalism, amongst other security issues that we faced in the country that period. So generally, policies and reforms in the sector has driven improvements in the oil production in Nigeria.
All right, so earlier we looked at, an overview of 2024 and how that Nigeria sort of recorded some, good feats in that particular year. But before we look at your outlook for 2025, I do not know if it bothers you that the NUPRC had to issue a direct exploration and production, had to issue a directive, rather, to exploration and production companies to strictly adhere to the crude oil supply obligations for local refineries. Isn't that worrisome? I mean, is there a premium they enjoy for not supplying the local market, or do they need some incentives for them to be able to do so?
I don't think they require any incentive, but I just think that, it's a business approach, business angle. If they are selling to Nigerian refineries, it will mean Naira for crude would have to happen. So they'll be getting Naira for their sale. But if they are selling to, if they're exporting, like they're selling to customers outside Nigeria, they'll be getting dollar revenue. So I just think it's a business approach to things in that they earn dollar revenues when they export, and in selling locally, they'll be earning in Naira. So I just believe there is a need to follow the rules that have been put in place by the regulators to ensure that there is a balance in this. I don't think there is any additional fiscal incentive that should be done. It's just, protecting the interests of the country while businesses also stay profitable.
All right. Do you have any recommendation for striking that balance? Because, I mean, people are in business to make money, and if they feel that supplying to the local refineries would mean less forex accretion for them, they might want to do what they deem fit. But we also have laws that sort of stipulate how those things should be done. So how do we, balance it here? There is a law they're supposed to follow, which they are not following. And on the other hand, it probably would have some not so good impact on their businesses. How do we strike that balance? What do we need the regulator to do at this point?
I believe the regulator has done what it's supposed to do, which is the crude oil supply obligations. And I believe it was a stakeholder meeting, coming together to say, okay, this is what should be done, and this is what should be done so that there is a balance. So what I believe the regulators should do is to ensure effective implementation of these crude oil supply obligations. That would ensure that both parties are benefiting out as a result of whether they want to earn dollar revenue, which is better for their business. But there is a need to strike a balance, and I believe implementation of the laid down rules is what would ensure that this would happen.
All right, that's interesting. And of course, we know with the advent of Trump comes conversations around crude oil prices, and there are questions around what would happen as a result of that. So talk to me, how can Nigeria maximize its opportunities and sort of navigate the challenges inherent in that development, whether we end up having lower crude oil prices?
I believe what the authority can do, like that's the government, because the fiscal authorities don't have any place they can't do anything in terms of global oil prices. But what they can do is improving crude oil production and sustaining it at a high level. That way, in situations where we have higher oil prices, we're able to take advantage of the high oil prices, and we are able to set aside some of the revenues that was made in that period for periods where oil prices are lower and we're not able to generate as much revenue. I believe that is the low-hanging fruit that the government can do to manage the expectation of lower oil prices in the future.
All right, so still talking about, crude oil supply and all of those things, maybe we should look at production here in Nigeria. Nigeria projects, a production of 2.06 million barrels per day in 2025 with a benchmark price of $75 per barrel. I mean, with all of this conversation around, a Trump presidency and his baby drill, baby mantra, are these projections achievable?
I'll look at it in two angles. First, in terms of oil price, I believe this is achievable. Looking at the average oil price in 2024, it was about $80 per barrel, and we're expecting some moderation in 2025. And this is because of the expectation that global supply of oil will be more than global demand. So in terms of oil price, we believe this is achievable. But looking at
let me come in here. Let me come in here. When you say $75 is achievable, some persons feel like if the baby drill mantra continues, and maybe somehow, I don't know if Trump will be able to, convince OPEC, to keep producing and all of that. But in looking at all of this, do you think that $75 is possible? Because I know that there were times oil price got as low as the 60s in 2024, when we didn't even have this conversation around drilling, producing, and all of those things.
Okay, so I will also look at it in two angles. First is OPEC supplies 60% of the crude of oil in the world, and which is higher than what US is supplying, although they are one of the largest producers of crude oil. But as a standalone, US is not supplying as much as OPEC, it's about 60%. And looking at in terms of trade and in terms of the dynamics of this percentage, we would expect that, if the US is not aligning with OPEC, there is the chances of OPEC yielding is slim. And looking at the stance as of the end of 2024, the OPEC is still maintaining production cuts even to H1 2025, which signals that they still want higher oil prices. So I don't think oil prices will drop significantly low to about $40 per barrel or $50 per barrel. And also, the second angle I would like to look at it is that, I am of the opinion that, the president, the US president, President Donald Trump, is pro-corporate. I don't think his administration or policies that he will be implementing in his administration would have significant negative impacts on oil corporates in the United States. So I believe that oil prices will average about $70 to $75 per barrel in 2025. And we're not also looking at all the geopolitical challenges that are still on ground in 2025.
All right, so talk to us about your outlook generally for 2025.
My outlook for oil prices or for
not just oil prices, the oil and gas sector generally, especially even the downstream sector in Nigeria, where we're seeing a lot of activities. Even the upstream sector, we're seeing so many things happening in all of those, in that space or in those spaces.
Okay, for global oil prices, of course, we expect a moderation as we expect global supply to be way more than demand in 2025. So we expect a moderation for oil prices. For oil production in Nigeria, we highlight that the government has a huge budget of what they budgeted for production is about 2.06 million barrels per day, and which we believe is a little bit on the high side, given that in 2024, where we have an average of 1.34, even as high as 1.49 million barrels per day as of December 2024, our rig count is about 15. In years where we have done about 2 million or more barrels of oil per day, our rig count was about 34. And so for us to experience crude oil production as high as that, it will mean that our rig count has to double, which simply means we need much more investment in the oil and gas sector in 2025 to meet the crude oil projection that has been projected in the budget.
All right, thank you so much, Bolade Agboola, macro and equities analyst. I'm afraid we have to go now. Thank you so much for your thoughts on the show today.
Thank you for having me.